Complicated? Accrue lets you focus on what is really important: life. Invest in premium commercial real estate for as low as $1,000 without hassle and worry. Accrue, making the exclusive inclusive.
Well, our next session tackles one of the biggest topics ever to be discussed in the sector, and it's interoperability. How do security token protocols really communicate with each other without stifling existing systems, and also the overall user experience? Well, we're going to be covering just that in today's topics. Please welcome moderator Graeme Moore of Polymath as he leads this discussion with Colin Miles of Zilliqa, Gledhill of IVNO, and Ami Ben-David of Ownera.
Hey everyone, thanks for the intro. Great to be here at the Security Token Summit, and thanks to Draper Goren Holm. Thanks to everybody and all the sponsors for making this happen. So I think before we get into this, we're going to be talking about interoperability between security token protocols. I think it makes sense for the panelists to introduce themselves. So I think we'll start with Ami. Go ahead.
Hi, hello. I'm Ami Ben-David. I'm the founder and CEO of Ownera. I've been working on digital securities and security tokens pretty much from the beginning of this market, and been involved in founding and investing some of the companies in the space. With Ownera, our focus is mainly about interoperability and interconnecting the market to create a large financial institutional market around digital securities.
Awesome. Ryan, go ahead.
Yeah, hi, Ryan Gledhill. I've personally spent my career managing development teams of up to 30 with various different teams. I fell down the rabbit hole of blockchain in kind of late 2016, and I have a passion for using emerging technology such as blockchain and tokenization to affect real change in incumbent markets. So as IVNO CTO, I'm in charge of driving rapid transformation within capital markets, offering an enterprise tokenization platform that adheres to financial markets needs and regulations, and also using our own tokenization technology to create the de facto settlement option on Corda.
Awesome. And Colin?
Yeah, hi Graeme. I'm based in Singapore with Zilliqa, which is a high-speed, high-security blockchain, and we are a partner in an exchange called HGX, which tokenizes securities, asset-backed securities.
Awesome. And then I'm Graeme Moore. I'm the head of tokenization at Polymath. Came from a financial services background, been at Polymath since 2017, where we focus on pretty much all things security tokens. I think to get this discussion started, and everyone please feel free, if you want to interrupt someone or if you want to jump in or you disagree with what someone's saying, please. We want this to be a lively conversation, so the participants can get to the real meat of what's going on down with all things interoperability. So to get things started, I guess I'll start with Ami. What do we mean when we say interoperability?
So I think security tokens, more than the general world of crypto, needs basically platforms to be able to connect to each other, because there are so many platforms out there trying to digitize securities, and securities cannot really travel easily. They're not bare instruments like behaviors like Bitcoin or something like that. That they carry with them a lot of rules and information, and who can invest and who can't invest and so on. So it's much more complicated than a bare instrument to interconnect. And therefore, when we talk about interoperability and interconnectivity, we're talking about the actual ability of somebody launching an asset on one ledger to be able to sell that asset and have that asset traded on a different blockchain. That's the way that I define it.
Got it. And Ryan, I feel like I saw you maybe unmuting and potentially wanting to jump in there. Anything to add?
No, for me, interoperability is quite a complex topic. So I try and break it down into kind of three distinct layers. So firstly, we have integration, and this isn't anything new. We've been integrating for 20 plus years, but we do need to integrate blockchain and tokenization systems with existing systems in order to augment their current capabilities. I then think we have intra-blockchain interoperability, and by this I mean applications on the same blockchain using shared protocols. So, for example, IVNO can be used as a settlement provider or a utility layer throughout the Corda ecosystem, because at that protocol layer, at the Corda layer, we're able to make assumptions and guarantees that the protocol itself enforces. So that's intra-blockchain. And then we can take that even a step further, I think, and define interoperability at the inter-blockchain level, which I think is what Ami was talking about there. So, for example, we could mint security tokens on Zilliqa or even on Polymesh, which are then traded between counterparties on their native chains. But then, for example, IVNO can provide settlement services between the same counterparties, but on Corda. And this, of course, is generally much harder to achieve, and you add in a number of variables there between the chains that means they're not natively compatible. But you can easily see how powerful these three things are when they're combined. The ability to interoperate with other chains means that you can pick the perfect chain or the perfect application for whatever it is you're trying to achieve. And I think when we move towards solving interoperability in the long term, we move towards this kind of Pareto efficient ecosystem where we're always able to use or choose the right tool for the right job.
Right. And then Colin, you know, someone might be sitting there watching this panel and seeing Colin from Zilliqa and going, well, wouldn't Zilliqa just want all of the activity on Zilliqa? You know, like what excites you about interoperability?
Yeah, I'm believing in the grand vision. I like the idea that all of the chains are going to work together and all of the tokens will be interoperable, because we need to build a much bigger market, a bigger level of consumption across all of the investors that we want to unlock around the world. So I'm quite excited. Obviously, we have a kind of walled garden at the moment, but when we have some bridges, when we have some interoperability, the tokens that we're offering can be sold on compliant exchanges all around the world.
And so you mentioned bridges. Are bridges, you know, can they get the job done? Is that all you need? Is I have a token on one blockchain and then I use a bridge and then maybe I wrap it on a different blockchain? Or, you know, is that good enough?
It's a workaround. It's a patch, I suppose. Ideally, it would be fluid and automated and fully compliant across all these different levels that we can read in the security token standards. But for now, I think we'll be able to just start that process, moving across from ETH to Zilliqa and Zilliqa back to ETH, for example, and see how it goes. Right,
got it. Now, Ami, like, why is interoperability so important from your mind? You know, I might be thinking I can just create a security token on a blockchain, and if that's the blockchain where the majority of activity is happening, then you know it works and it's fine. But really, what gets you excited about it?
So we work more in the institutional market, and what we found there was that every institution, every exchange was building their own platform that was unable to speak to other platforms on other organizations. And sometimes within the same institution, you'd see 3 different platforms using 3 different technologies, not able to speak to each other. And sometimes even if they use the same blockchain technology, they can't speak to each other. So we saw this as a huge problem. As a user, for example, you can't have assets in multiple platforms. You need to, if you want to hold a real estate here and you want to hold a token there, you need to register to KYC and AML across multiple platforms. It's a nightmare. And without actually having interoperability, I believe we will not have a digital securities market, because securities, private securities especially, are not as liquid as public securities. So you need the worldwide global distribution in order to reach the critical mass that is needed. So, you know, one bank alone, doesn't matter how big it is, will have a problem creating liquidity for a private asset. 100 banks and 100 exchanges can definitely provide such liquidity. So the way that we tackled it was a part of a nonprofit group called GDF, Private Market Digitization Group, where we created a protocol that is designed to interconnect different blockchains and different platforms. It's not even at the blockchain level, it's at the level of the transaction of digital securities. So what we're connecting is not the actual underlying blockchain, but we're connecting the digital securities platforms that sits on the blockchain. And the idea is that every asset can be launched on its own ledger by a financial institution. And then this financial institution can connect to the network called FinP2P. So the financial institution can connect to the network, publish the asset to the network, and then and then it's permission. So they can say which other institutions can see the asset. These other assets have to approve, and then the other institution can start bringing clients and investors, and those investors can do transaction. The transaction are routed to the source of the asset and then executed there. And by doing that, we completely bypass the problem, because we realize it's almost impossible to connect n networks to n networks. It's an n square problem. It's just never going to work. So instead of doing that, we design a network that sits on top of all the blockchains. It's just a routing network that interconnects all of them. And that was an idea that came up in the group about 7 months ago. And initially, a lot of people were skeptic. But actually, beginning of the month and earlier today, I showed a video with 10 companies interconnecting into the same network. With IVNO was one of them to provide the settlement. We had ledgers, we had Corda platforms, Fabric, Ethereum, Stellar, Symbiont. We had custody, 3 different custody providers, Fireblocks, GK8, and Pictor, and we had multiple payment mechanisms, including IVNO and including USDC. And each one of them had to connect to one network, and then it was connected to the whole network. So we actually feel that we achieved interoperability. This is no longer a theoretical question of something that needs to be done with bridges. It's done. And now the FinP2P protocol is published, and we are building it on Ownera. We're building a node for FinP2P, so people can even connect easier to the node, just build a bridge into the node, or an adapter, as we call them, into the node. An adapter takes basically a couple of weeks to write if you're a ledger, or a few days to write if you're a custody provider, and you can be interconnected. So we feel that this is a problem that is solved better by a routing network rather than actually physically connecting the blockchains to each other.
Right. And so in terms of sort of status on where we are right now, right, you say it's solved, right? Hopefully. But it still takes time for these institutions to onboard, for these institutions to buy into the vision, for them to really start putting actual assets on these networks with real dollars behind them. You know, where are we at in terms of the adoption cycle of these types of interoperability protocols? Brian, I'm wondering your opinion on this.
Yeah, sure. So, well, there are a number of protocols currently trying to solve interoperability. Cosmos, Polkadot, Quant's Overledger, and a bunch of others. They're mostly focused at public chain interoperability, and I think FinP2P is the most forward-thinking and the most likely so far to take the security tokens forward. But if I may, I'd like to focus the question slightly, or refocus the question slightly.
Yeah, please.
And just ask which of these are likely to be the most successful and why. And specifically, as I say, in the tokenization and security space. So we obviously know that tokenization software needs the capability to mint tokens, sure. But also it needs to adhere to financial markets regulation. It needs to take into account the size of the organizations within the space, and then be scalable to that level. It also needs to protect privacy and token security, and market position above all else. So you certainly on a public chain like Ethereum, you'll be giving away your market position because the chain itself, the blockchain itself, is transparent. Now, yeah. So the next step in the journey is an interoperability protocol that's just as well suited to achieving these goals. And as I say, I personally believe FinP2P has a strong shot at serving that niche going forward.
Got it. And then, Colin, at Zilliqa, what are you guys seeing in terms of just general assets and their desire for interoperability? And then on the asset side, more specifically, are you talking to people issuing equity, Are they issuing debt? Is it real estate? Is it some new kind of token that has never really existed before? What are you seeing that on the asset adoption side of things, and what they're looking for interoperability, if anything?
Yeah, I mean, it's still very early days. We're in the MAS sandbox here in Singapore. That's the Monetary Authority of Singapore. So we're all trying to be compliant and follow regulatory oversight in the right way. We created a unique token for premium whiskey on the HGX exchange. So that was a very interesting first foray into asset-backed securities. But another private equity bond was issued here recently with two partners, Temasek being one of them, a government-linked corporation. And that's quite interesting to see private equity bonds coming into the market as well. Certainly, there's a lot of people talking about real estate projects with us now at the moment. So it's early, but these are the key areas where we're seeing action.
Got it. And then, Ami, what are the challenges? Right. So you say it's solved, but everyone encounters challenges. There might be some challenges with adoption, or perhaps just base level. What are the challenges that you're seeing right now?
I think the key challenge that we're seeing is kickstarting a network, because until we had a network that can interconnect everybody, and just one word about Ryan said earlier, there are platforms that, like Polkadot and so on, that try to connect the blockchains between them. Just to be clear, what FinP2P tried to do is not to connect the blockchain, but actually interconnect the transaction level, so to allow people to do transaction. And we actually see platforms like Security connect to FinP2P, where underneath they have multiple blockchains. So we interconnect the vendors, the venues, the exchanges, and I think that one of the key challenges that we're seeing right now is the kickstarting of this network. I think that we've seen several markets take off in the digital space over the last several months, and digital security hasn't taken off yet. But I believe that once we cross a certain kickstarting or chicken and egg kind of issue, then it will start happening really fast. And the problem is this: you're talking to institutions, and the institutions are saying, wow, okay, we can interconnect to each other, we can launch in the network, and then, but where are the assets? And then you go to the assets, and the assets say, we would love to get on the network. It sounds great. Which institutions are on the network? Yep. And that's the problem. If you give the assets the list of 10 institutions that are coming in, the assets won't in. If you give the institutions the list of 10 assets that want to come in, the institution is in as well. Okay, so you have, and if none of them is in, then none of them is in. And that's where we thought that a nonprofit group is a good place to put everybody together. First, show that the technology works in force, like with people integrating and testing the platform from the leading platforms and technologies in the market. And then we're now at the process. We're in the second stage of the pilot around FinP2P, which is designed to bring 10 major assets into a similar number of financial institutions, and basically bring them together to the table at the same time and kickstart this network. And that's a major effort that is going on right now. We're on the lookout for assets, and I can say what sort of assets we're interested in within that network, what sort of assets the institutions are interested in, and this is the kind of work that we're doing. And it's different from STOs, where potentially smaller assets and assets that can tokenize the entire assets were coming out. This is an institutional market, so we're talking about kind of large assets, which are in the real estate, in the funds markets, and that's on the yield side, either real estate or fund. And on the growth side, we're talking about growth private companies, where security tokens or digital securities is an alternative to SPACs, for example.
Got it. Then Ryan, same question. In terms of the challenges, is that really all it is? It's how do you overcome the chicken and egg problem, and then what is the solution to that?
Yeah, good question. I'd like to approach it from maybe taking a step back and talking about interoperability as a whole from a developer point of view. And I think most of the challenges there arise from tokenization being a relatively new and a relatively nascent subject. If we think about it from a development viewpoint, how many people do we on the panel know that understand different techniques, atomic swaps, hash time lock contracts, blockchain bridges, cross-chain, or there's plenty of them. I expect we can count the number of people we know on our fingers. So this developer upskilling and education will ensure that we can pick the best interoperability technique for the problem. So I think we need a big push from industry and from consortiums, and this is one part of what FinP2P is trying to do. And I think we're starting to see this with the Ethereum Enterprise Alliance, for example. So with these consortiums, we'll start to naturally converge towards these global standards. Yeah.
Does that ultimately solve the problem? And this is just, like sort of devil's advocate, right? So we had a whole bunch of different companies starting their own security token protocols on Ethereum. And then we tried to have one security token protocol, but then another company says, oh no, well, my protocol is better than that. And then now we have the interoperability protocol to rule all of the interoperability protocols, but then ultimately someone's going to have another protocol that's better for interoperability. So, when do we start to see those winners emerge? Is it a year from now? Is it 5 years from now? 10 years?
Yeah, so I think we'll converge towards a standard which will make interoperability almost a built-in function of each blockchain. And we'll have security token platforms that don't adhere to these standards, and these will fall by the wayside. And the reason is due to utility. So you can imagine a future in, as you say, 5 to 10 years, where a security token can be minted. It can be used for collateral on one chain, staking on another, fractional ownership, and so on. And we'll see markets that are currently entirely illiquid becoming tokenized and traded day to day. But I think even if we look a bit closer, so if we look before those 5 years, I think we'll soon see an inflection point of sorts, which is less about interoperability, but more about markets. So markets are currently, as markets become tradable 24/7, and settlement services are also available 24/7. What does this mean for traditional markets that are used to market cutoffs and set trading hours? And I think that will be interesting to see, and that will guide some of that interoperability discussion between consortiums.
Right. And then Ami, so interoperating with all these different chains for FinP2P, it sounds like a big undertaking. And so how does that shift the problem from where it is now? So the problem to me right now, it sounds like with all these different protocols and all these different blockchains, is the problem is now borne by the financial institution, right? The broker dealers who are helping fundraise, they need to be able to deal with 5 different blockchains. The exchanges maybe need to deal with 10 different blockchains. So is the primary benefit here is that you become the de facto, we will handle all of these chains that exist, or we'll handle the top 5 or the top 10 or the top 20, and we'll make sure that no matter what, if you plug into FinP2P, we take care of the rest. Is that kind of the main benefit here, is you're reducing their need to have a 10, 20, 30 developer team down to 1 or 2?
I think the main advantage here is that we're at a stage now where there are a lot of providers in the market, and it's really hard to predict which one will win. And actually, I don't think there's going to be a one winner take all. There's going to be multiple services servicing different segments of the market, different asset classes. Remember, we're talking about a market with the private market, hundreds of trillions of dollars worth of assets, all sorts of different assets. So there's going to be multiple networks. So the whole idea, and I think Dan from Security did describe it well on a video, and asked Adam to share the video on the chat for the group, where we are actually showing the FinP2P in operation. And Dan from Security is saying, well, I've taken this asset from the network, and I actually don't know which ledger it's on. I think it's Fabric, maybe Corda, it doesn't remember. And we've taken the asset and we're launching it and we're trading it on our network on Stellar. So the idea is that you have to connect once to the network with whatever ledger you chose. And we've shown transaction where the buyer is on Fabric, the seller is on Corda, the money is on USDC on Circle, and it just works because it's a transaction network. So for me, the big advantage is that if for example Polymath is not on FinP2P network, and you have, let's say, 10 clients or 100 clients that work with Polymath, you could build an adapter to FinP2P. You can connect to FinP2P, and the next morning, every one of these 10 assets will be 10 clients of Polymath will be able to start pushing assets to the network and pulling assets from the network and trading them. So I think that is the beauty of a platform of that nature, that doesn't really try to connect multiple blockchains to multiple blockchains, but actually creates a network of routing and messaging between them.
Got it. And so, we're talking a lot about all these different blockchains. Is Ethereum just not good enough? And I mean, I obviously have my own opinions on that, but Colin, I'd love to hear, why does someone choose Zilliqa? Why would someone not just say, oh, well, Ethereum, that's where most of the developers that we've seen in the ecosystem and probably the loudest fans in the blockchain world exist today. So, what's really that main draw that would draw someone away from Ethereum?
Yeah, so I think one of our key features is security. So we look at our own language, Scylla, which is incredibly and importantly computationally verified. And that gives us a lot of surety when we're working with high value assets and trading them. So I think that Ethereum has set a lot of the standards for tokens, but Zilliqa has this built-in way of protecting the asset, which I think along with our transaction processing speeds gives us a slight advantage in that trading mechanism.
Got it. And now, question for each of you: what are the regulatory concerns when it comes to interoperability? I know a regulatory concern is always a fun topic to discuss, right? But because now you're transporting all these assets across different networks, how do the things like compliance controls stay intact when you have these compliance controls that exist today on the chain itself through whatever protocol it might be? How are these being tackled? And Ami, we'll start with you, and then Ryan and Colin.
This is a very difficult problem, and the way that we chose to solve the problem is to eliminate it. So the way that we work is that every asset is managed on the source ledger where it was created, and every transaction that goes into the ledger has to be approved by them. So you have a single source of approval for a transaction going in, where the regulatory compliance can be checked. And in this point of entry, we have our own, at Ownera, we have our own regulation app store. Other players have other regulation, but it's basically rule-based platforms where rules are checked and a decision is made on the fly based on some sort of an AI platform on whether the transaction is available or not. Another kind of requirement is to identify the user. You need to have accreditation, you need to have KYC and AML and so on. Some entities choose to solve this with whitelists and blacklists, and we felt it was a little bit limited platform way of doing things. So instead, we opted to use a claims system like an Indy, Hyperledger Indy, but we call them certificates. And effectively, every user on the Ownera network has a FIN ID, one ID, and they carry certificates with them. And the certificates can be signed by different entities on the network. So a client can come in with a KYC certificate signed by a major bank, and they go to another bank, and the other bank can choose whether they respect that certificate or not. And we're seeing more and more of that type of cooperation, where there are third parties that can certify certificates of accreditation, and everybody can know that they're trusted. And so these are ways where we mitigate the problem, and we break it into small pieces that are solvable. And we think we have a working mechanism that allows each company to bring their own technology and connect it to FinP2P, and it still works. So and that's how we solved it.
Got it. Yeah, it's sort of music to my ears. Polymesh, we call them attestations, but very similar idea, right? Where everyone seems to be moving beyond this world of whitelists and blacklists, much more into the claims type world, where you can port these attestations that have been made from one party to another if the parties want to do that. Yeah, so completely agree.
So imagine theoretically that Polymesh builds an adapter to FinP2P, and a client comes in from another institution, not on Mesh, but they come with a certificate that is signed in a way that you can verify the signature, and you can look at it. Okay, this is an accredited client. You put them in, you allow them to transact within Polymesh because you know who they are.
Yeah, exactly. So Ryan, any thoughts on the regulatory side of things? Good things you're hearing, bad things you're hearing from regulators, steps forward.
Yeah, so it's interesting because we're in the early days of tokenization and securitization. We saw a lot of focus on solving the technology problems first and then worrying about regulations after. And we've seen some of the problems that have occurred because of that. At IVNO, we approach that differently. and we spoke to a leading US securitization law firm, and we made sure that our architecture was regulatory friendly, let's put it that way, before we solved the technology problems. And a lot of that comes down to, as Ami says, being able to identify who you're transacting with. So you can't effectively follow AML regulations without knowing exactly who you're transacting with. So within Corda and within IVNO, we have the concept of everywhere, the same as FinP2P, everyone that joins the network must be certificated, they must be identified, and there must be a level of KYC that takes place before they're allowed to join the network and before they're allowed to transact any tokens.
Got it. Colin, some comments on regulation and as it relates to interoperability and where you're seeing things going?
Yes, I mean, again, very early, what we're doing is working in open finance, that is bringing traditional institutions into our world. And actually that's mimicking some of their processes into our own way of delivering tokenization. So actually we don't have full automation in this, and we're trying to help them work out how to be compliant in their original practices and then bring it into a tokenization model.
Got it. So I think we're about out of time. So last question, rapid fire. What is the market cap of security tokens 5 years from now? Ami, quick, hit me.
5 minutes. I can see it being in around $100 billion.
Love it. Ryan?
I think we're closer to $1 trillion.
Colin?
Yeah, 1.75 trillion.
Oh, Ami, you're shooting low, man. Everybody's outgunning you.
I'm very realistic.
Awesome. So we'll end things there. I guess last thing from each of the panelists, where can people reach out to you, or where can they learn more? Ami?
So two things. FinP2P is available on just Google FinP2P and you will find the information. For me personally, you can reach me at ami@ownera.io for if you want to connect to the FinP2P network, connect to our nodes, to adapters. Just approach me directly, and I'll be happy to work with you and assign you to the right teams.
Awesome. Ryan?
Yeah, the best place to go is to visit ivno.io. Easy to remember. We have a contact form on there, but if you want to reach out directly to me, please do. It's ryan.gledhill@ivno.io. Awesome.
Colin?
Yeah, Zilliqa.com is the corporate address, but I'm on Twitter most of the time, so @Colin Miles is the quickest way to get me.
That is mine too. I'm on Twitter. You can find me @MoorGrams. It's my rap name from high school. I still have the Twitter handle, so that's always good. So everybody, thanks for coming on. Thanks for being great panelists. I hope everyone who's watching enjoyed the chat. Thanks, and enjoy the rest of the conference.
Thank you very much.
It's great.